Today I will show you people how I got these beautiful entries using the Malaysian SNR. I think I've talked about it before, the Malaysian SNR, using SMC concepts. So I'll show you how I scale down from the daily time frame. It's so simple actually, from the daily time frame to the 4-hour, to the 1 hour, and to the 15 minutes for precise entries, for sniper entries. Like the first one, it was so beautiful. Look at that sniper, look at that sniper, yo, look at that sniper, bro, look at that sniper. The second one, I caught it in between, and the third I also caught it in between, but the first one was sniper. So let me delete all this, then we start afresh to see how it went. Let's go. So we start afresh, and we start with the daily time frame to look for the bias. So clearly, I'm so sorry, I have not yet paid for my trading views, so I don't have the replay, but I hope you people can still learn. So the market was around here. I actually, in Malaysian SNR, you start by the open and close candles. I told you those are about this and this. Let me just remind you people, it's in my previous video. So let's say this is bearish and there is a bullish candle. This here in between, I talked about MSNR. This is a V level, and the vice versa, it's an A level. If it was something like this, a moment, it's an A level, and this is an open and close candle. If it was something like this, but it should be of the same trend. Yeah, I talked about that. So with all of you people knowing that, you can check my previous video. So the market was here. I actually came to the daily time frame and spotted an A level. I spotted that, and I waited for the price, for the market to reach here. As you can see, it was a good V level. Let me adjust that. You start with the daily. You start with the daily bias. In here, you look for A or V level, or open close to be taken out. Then that's number one. Then number two, you look for a breakout in the New York session in either 4 or 1 hour. You look for a breakout in the New York session, either 4 or New York hour, in the New York session kill zone. In the New York session kill zone, just a minute. 3, you spot liquidity. I've talked about this in my previous videos, I don't want to dwell much on it. You spot liquidity, or other people might call it inducements. And the last thing, timing. You enter your trade in the New York session, specifically TP if 1 hour, TP is 4 hour. If the 1 hour is your entry, your TP is the 4 hour, and if 4 hour is your entry. By entry I mean you entering the trade by using the 1 hour method for breakout. Your daily time frame is the TP. So as I said, we start looking for the buyers, an A level or a V level or an open close that has to be taken out by a week, with a week. Then after that, you look for a breakout in the New York session, mostly in the kill zone, in either the 4 hour or the 1 hour time frame. In the 4 hour, you look for a V level to be broken out and then a retracement. Then you enter your trade. If it's the 1 hour, you look for it, but the difference is that your take profit will be in the 4 hour. If in the 4 hour, it will be in the daily time frame. Then you must spot liquidity. This is key. Spot liquidity. This is key. That is key. That is the main thing actually. You spot liquidity. Then your timing to enter the trade in the New York session, or don't enter the trade at all. If not the New York session, you don't enter. For Malaysian SNR, that's how you use only the New York session when there is a lot of volume in the market. In the 4 hour time frame, what do we look for? We look for a previous V level, and with the previous V level here, we can see our previous V level was around here, right? It was around there. That's our previous V level, but it's so far. And when was it broken? It was broken so far. So I usually scale down to the 1 hour time frame. Most of the time I just come from the daily to look at the buyers. I spot the A level or the V level or the open and close candle. Like here I spotted this right here, this A level right here. It was wicked. Let me move that line. It was wicked by this. Let me put something there, something small for you people to see without having to interfere. It was wicked right there. I scaled down to the 1 hour time frame. I don't use the 4 hour because it takes so long to be activated, to be broken. So, and the 1 hour is so more precise for me. I have a high win rate while using it. So here it's when it was broken. Pardon me, I'm sorry. I think I'll just delete that. Here it's when it was started. Let me put a line there for you people to see right here. So what do I wait for? So I know it's bearish. That's one. It was triggered, but what do I wait for? Confirmation. What's the confirmation? The previous V level, because it's bearish, the previous V level before it got triggered right here. The previous V level before it was triggered. So let me put a line there. This was the previous V level before it was triggered. Why is it right here? Or someone can mark also here. Anyway, it doesn't matter. Right, it was right here. So what do? I mark the New York session. When does it start? In East African time, it starts at 3 in the overlap with the London session, but it actually starts alone without the overlap at 5. So let me break it to 5. Where is it? 5. So this is the kill zone, this is the overlap, 5 and 3. I'll delete 3 and I will tell you what it's meant for. So I waited for price to break here. So this is how price actually went. It was bullish. It tapped to our zone, our A level in the daily time frame. The next step we entered the 4 hour to see if the V level was anywhere close, and this V level was the closest, but in the 4 hour it was so down. So we scaled down to the 1 hour time frame to see the V level before it was a bit higher, but in the 1 hour time frame I want you to mark 2 things. If you scale down to the 1 hour time frame, if you're not using the 4 hour V level or A level, your take profit will be in the 4 hour time frame, not the daily. If you're using the 4 hour, your take profit will be in the daily time frame. So I mark this V level here in the 1 hour time frame. I waited for the price to break it. it's triggered it, but it did not break it with the body, so that's not yet a confirmation. And here it broke with the body. So what do? I wait for a retracement. So in the retracement, let me draw a gun box. A minute. In my gun box, the premium and discount zone, so I'm pretty sure it won't be anywhere in this zone, right? So I look for the top zone. Let me say the top and bottom for those who don't understand. If it's a sell, you look for the farthest zone from the market, the top side. It's premium and discount, but if you still haven't learned, you can just know the farthest one. So I know it's not gonna be down there, and it was so easy actually for this, cause here I saw a fair value gap. Right here I saw this fair value gap. Let me zoom in for you people to see. I saw this fair value gap in the 1 hour. Then what did I do? Remember, we are trading the MSNR and the SMC. We are using MSNR and SMC for setting that fair value gap. We scale down to the 15 minutes time frame. We scale down to the 15 minutes time frame. This is where I say we wait for a super sniper entry. In the 15 minutes time frame, I saw this again. Now here's where most traders get confused, which one to use, which zone to use, which point of interest to use. But I'm pretty sure somebody entered here after the New York. Somebody entered here, somebody who doesn't know how to trade MSNR, stop loss above the fair value gap, and was taken out, you see. And I'm pretty sure another person also entered here. Those people who wait for a reassurement of a fair value gap, and do you know what, was still taken out. So how do you know? As I said clearly, very clearly, if you're using the 1 hour time frame in the MSNR, you wait. You have to wait for the New York session to start officially. I kept on saying that. It starts at 5. Anything below 5, anything under it, it's in the kill zone. It's probably liquidity. Look at from 3. Why is it? You see, it was going to take out all these people liquidity. So what happened? I scaled down to the 15 minutes. Actually, this is what happened. When I saw this fair value gap, I wanted to take shots from here. Stop loss about the fair value gap and take profit. I'll talk about it. But then I remembered, due to past blowing accounts, I have learned discipline, and I told myself you have to wait for the New York. That's how it is. So in the 15-minute time frame, the entry was superb. It was nice. You have to wait for the New York session to start. So here are the key things. Let me write it down. The New York session is the key thing here, honestly. Timing. The New York session is the key thing, and liquidity. In every trade you take, the timing and the presence of liquidity is actually the main thing you need to notice inducements. I think I'll just write it down. If you don't spot any liquidity, you are the liquidity. For example, if I did not spot all this liquidity, because all of you, I'm pretty sure you know by now, inducements. If I did not spot all this, I honestly will not have entered. I prefer just missing the trade than being the liquidity itself. Where is it? Right there. If I did not spot this, I would not have entered, because if you don't spot the liquidity, you are the liquidity. So what happened? I came down to the 15-minute time frame. I saw this. The price at that time was around here. I was so tempted to enter after these people got swept, but I remembered my timing. It has to be New York session, so I just waited, and it actually paid off. So at around 5. So that's how I knew these people are going to be taken out on this one, because these people are the liquidity. So that's why I chose this fair value gap higher to enter. Stop loss. Let me show you another trick I learned using the Malaysian SNR. It actually likes to tap these V levels and open close. You see, let me zoom in for you people to see. You see, like this open close right here, it likes to tap on that, but I was not keen on that. I did not even enter there. I just entered normally in the fair value gap. Stop loss slightly above the fair value gap. My target, as I said, you go, because I used the 1 hour, I went to the 4 hour for take profits and exits. So my take profit, I'll put that, my take profit was here. Let me erase that. My take profit was in that V level in the 4 hour, this V level, this V level. My second take profit was here in the open close, and my third take profit was here in this other open and close candle. So yeah, that's how pretty much it was. It was a beautiful 1:6, and so my first TP was smashed, my second TP was smashed, and my third TP was not smashed. But this is what happened. My third TP got me on break even right about here. Let me put a rectangle for you people to see. Here, after my first TP was smashed, it went to smash the second TP, and here is where I got taken out. I was taken out here in this small supply zone, but I don't really care because I was taken out in profits where my first TP was. I entered 3 positions for this. Yeah, so let's break down the rules again. Let's write how you trade the MSNR. MSNR. You start with the daily. You start with the daily bias. In here, you look for A or B level or open close to be taken out, then that's number 1. Then number 2, you look for a breakout in the New York session in either 4 or 1 hour. You look for a breakout in the New York session, either 4 or New York hour, in the New York session kill zone. In the New York session kill zone, just a minute. 3, you spot liquidity. I've talked about this in my previous videos. I don't want to dwell much on it. You spot liquidity, or other people might call it inducements. And the last thing, timing. You enter your trade in the New York session, specifically TP if 1 hour, TP is 4 hour. If the 1 hour is your entry, your TP is the 4 hour, and if 4 hour is your entry, by entry I mean you entering the trade by using the 1 hour method for breakout, your daily time frame is the TP. So as I said, we start looking for the buyers, an A level or a V level or an open close that has to be taken out by a week, with a week. Then after that, you look for a breakout in the New York session, mostly in the kill zone, in either the 4 hour or the 1 hour time frame. In the 4 hour, you look for a V level to be broken out and then a retracement, then you enter your trade. If it's the 1 hour, you look for it, but the difference is that your take profit will be in the 4 hour. If in the 4 hour, it will be in the daily time frame. Then you must spot liquidity. This is key. Spot liquidity. This is key. That is key. That is the main thing actually. You spot liquidity. Then your timing to enter the trade in the New York session, or don't enter the trade at all. If not the New York session, you don't enter. For Malaysian SNR, that's how you use only the New York session when there is a lot of volume in the market. And practically that's how it was. I think I will end that there, but let me show you how I entered the second one. You see, do you remember my TP? So when it touched here, it actually touched it. I don't know how you people will see, but when it touched there, I'm talking about this, not the second, this, because that's where my second TP was here. My third TP was here, but it did not reach there. So when it touched it took out my second TP. I scaled down. I did not see much, but I scaled down. It takes from one level to another. Let me show you how I did. Though that was risky, but yeah, that's what I did. So I saw this. I came and I saw this. Let me use path for you people to see. I came and I saw this. It touched down. Then I saw a reaction here. Then I spotted this. This is what I want people to see. I spotted this. And I told myself this might be a liquidity, because it clearly has a good momentum. If it breaks this high, it's definitely going up. That's how I knew that my take profit was not to be taken. That's why I put it in break even in profits. So what I did here was I marked this as inducement. I did mark this as inducement. Then I know it's a bit risky. Then I entered here. I looked for an imbalance. No, I'm sorry. It was in the 15-minute time frame. So I came here. I came in the 5 minutes. Still I wasn't sure about it. I gotta be honest with you people. I do not recommend that. But in case you're doing something like this, you use a small lot size, because it's not something that's super. So I came here. I marked this. Then I went to a higher time frame. I went to the 15-minute time frame. Still I remember, I'm not talking about MSNR anymore. I'm talking about how I got this. Then I saw this and I was like, it's something so small, so I'm willing to risk just a 0.02 lot size on that. Let me show you. Why is it? I was willing to risk a 0.02 lot size on this, and this is how I entered the trade. In the fair value gap, stop loss above this small order block, and my TP was in the 50% of it. And that's how I smashed that. It was so small and so funny, but yeah, that's how it was.